FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome, and you are listening to and perhaps even watching the Financial Survival Network. And well, today is the last day of August. You'll probably be seeing this on the 1st. In any event, a lot of things are happening in the world. First, don't forget, we're running our $1,000 gold giveaway contest. All you got to do is guess the price of gold, what it will be on September 25th this year at noontime, and we'll be having a webinar to announce the results. You find the contest link at financialsurvivalnetwork.com/contest. And well, speaking of contest, we have a contest going on here as well in the country. Light against dark, order against anarchy and chaos. And who better to make sense of it than our good friend Craig Hemke, aka Turd Ferguson from tfmetalsreport.com. Craig, it's great to have you back on. A lot has happened since we last spoke, I think about a month and a half ago. The price of silver has been levitating. Now, I guess silver and gold are kind of in a consolidation pattern. One interesting thing I want to discuss with you is if you look at the stock market, basically the stock market, the second the Fed takes their foot off the monetary accelerator pedal, it collapses, it goes down. And gold, precious metals are exactly the converse, unless they basically, whomever it might be, is keeping its foot on the neck of the precious metals markets. But the second they let it off, all of a sudden it shoots higher, and then it's back again to the same thing. It seems like they're fighting a losing battle on both scores.
Well, Kerry, nice to see you, my friend. Yeah, there's a lot going on. It has been a very interesting month. Probably the last time we spoke, like you said, was maybe middle part of July. You know, we thought we'd have a really good July. We did, we even better July than I thought we'd have. And prices of both metals peaked out on a short term back on August the 6th, when real interest rates bottomed down around negative 1.1%, based off the U.S. 10-year Treasury and the current inflation rate. Well, guess what? We've had to consolidate, and we get into these dog days of summer, the summer doldrums, where a lot of traders, especially the last 2 weeks of August, are on vacation or on holiday, sunning themselves in the south of France or someplace.
The Hamptons.
Exactly. But now they're heading back. Today, the 31st, end of the month. It's a UK holiday. It's going to be all hands on deck later this week, and especially after the U.S. Labor Day 3-day weekend coming up this next weekend. And I suspect you're going to see gold sharply rallying here. Like I said, when real interest rates put in the most recent low, I guess is the right way to look at it, price of gold on August the 6th was $20.80, and silver was nearly $30. And now here we are making new lows in real interest rates as you and I speak, but gold's $19.80, and silver's just now getting back above 28. I suspect that gap will close. We may end up having a very good week. Now we got economic data. We got the jobs report for August. It's coming up this Friday. There's a lot of things going on, but I think most of the world's going to start focusing on what's the Fed's going to have for us next in 2 weeks at the September FOMC. I suspect we're going to have another pretty good salty month here, and that makes a lot of fun.
Oh yeah, especially considering how many years we sat around watching the paint dry on the walls.
Yeah, no doubt about that. Well, and this key really is the level of real interest rates. That long-term, nothing correlates with gold better than the level of real interest rates. For people that want to try to track that, that's not something that gets quoted every day. Really the best real-time proxy for real interest rates is an ETF that holds Treasury inflation protected securities.
TIPS.
The symbol of that ETF is just simply TIP, TIP. And so you can see that as it goes up, real interest rates, inflation adjusted interest rates are going down. And as those real interest rates go down, gold goes up. I mean, it's like I said, it's the best correlation over the decades of anything for gold prices. Again, that TIP ETF, as you and I speak, is looking to make, or actually is probably going to post, new all-time highs today. The previous all-time highs were on August the 6th. So there's this kind of gap that's developed in that correlation. And mainly it's just been because everybody's been on holiday for the last couple of weeks, and we've had some consolidation in prices after that run in July. I suspect that gap's going to close. And, you know, the big announcement last week and what Powell's trying to get across now to make everybody understand that he ain't going to be raising rates for a long time. Don't even think if inflation suddenly goes 2%, 3%, 4% that they're going to be inflation rates. He wants everyone to know, for the point that you said about keeping the stock market up and all everything else. Who does everybody know they ain't going to be raising rates? Well, that's just going to make real interest rates go even deeper in a negative territory, and that's going to keep their metals going up. It's not, frankly, a whole lot more complicated than that.
Also, consumer confidence has something to do with this. Generally, consumer confidence goes down, gold goes up.
Well, yeah, no, that's true. And again, that's kind of a function of inflation. You know, if you're a little more confident, that tends to spark inflation, at least at the business level. Maybe they start hiking prices. You know, the consumer is more willing to pay higher prices because they think that the economy is getting better and stuff. And I think really, Kerry, this is all part of what bugs me, like about my Big Ten football, is the decision was made to stop playing some sports, and again, referencing football a couple of weeks ago, that maybe just was political in nature, but really any true, fair, objective observation of the COVID data showed you that it was beginning to recede again, like down where you live, all the border states, all that was starting to recede again by the middle part of July, and the deaths would peak in early August. It's exactly what's happened.
Yes.
And so we're going to start getting this kind of a pickup in economic activity as we head into the fall, into the winter. But the damage that they did, Kerry, was so great in locking down, you know, back in April and May. It's going to take years to recover from that.
So true. And we saw this CDC put out these numbers that the number of pure only due to COVID deaths, 9,200.
Yeah.
Everyone else had comorbidities, an average of 2.6. Right. Now, I'm not saying that they didn't end their lives sooner than otherwise would have. You can kind of see that in August, kind of June through August, that it did happen. But maybe it took 6 months off their lives, maybe a year, not to belittle that.
Right, I understand.
But those people with the comorbidities knew who they were, and they were easily protected. So to stop, you know, for 9,200 deaths, we wind up destroying the global economy.
Right.
And it just made no sense to me from the get-go. I knew this thing was overplayed and overdone. I'd been saying it from the beginning, and for that I got awarded the title of COVID denier and all this other stuff. But and the number of deaths that have happened as a result of the lockdowns can't even be calculated. It's
right, right, exactly. And it's just been a terrible thing that has happened. I mean, and there's no doubt. I mean, it has killed lots of people that maybe would have, like you said, died the next year otherwise. Sad as that is, you know. And I'll give you one more, Kerry. Where I live, there's about 600,000 people in the county that I live. We've had about 120 total deaths, which really isn't a whole lot, right, on a percentage basis. Even of those 120 total deaths, 110 have been people 70 and above. And like 90 have been people 80 and above. And I think that's universally kind of the case across the board. Well, here's the thing. I mean, again, this is kind of, I don't mean to be cold or crass about it, but it's only been in the last 50 years of mankind existence that we've had people living past 80, right?
Yeah.
So this virus comes along any other time in human existence, it wouldn't even been noticeable. As it, you know,
no one would be alive. There weren't that many elderly.
There wouldn't have been anybody around for it to kill. And so anyway, the moral of the story, but you know, that's all here and there. The damage, though, has been so substantial to the economy. I saw something, not this current weekend, but the last weekend on my local news. And they had a local survey. I live in a pretty big metropolitan area, and they surveyed businesses around the area about how much longer they could hang in there. Because a lot of businesses got the PPP loans, right? And other ways in unemployment insurance and all this kind of stuff. Of the local businesses, it was something like 5.5% to 6% didn't think they could make it another month. And then it was jumped to like 24% didn't think they could make it another 90 days. I mean, small business is the backbone of the economy, and you're still like restaurants, service industry things where, they can't operate at 25% capacity forever, right? And so this is only going to continue to be a problem. I mean, this notion of a V-shaped recovery is just nonsense. And that's why the Fed knows this. That's why they're promising to keep rates low through 2022. But what ultimately is going to happen is asset prices are going, home prices are, going up as people move. The cost to build a home is soaring as some lumber costs are up 250%. Eventually, we're going to get into more of a kind of a stagflation environment like we had in the 70s, where it may not be 15% inflation, like Paul Volcker and Gerald Ford were saying they were fighting, Jimmy Carter, those guys. But it might be 5, 6. And that's just on the government measurements. And you couple that with interest rates at 1%, you get these really sharp negative rates. And like I said, that's just going to continue to make the metals go higher. So moral of the story is I'm not one of these people that think, oh boy, we're near a top or in a bubble or something like that. Things are never going to go straight up, but I sure don't think they're going straight down either.
Yeah, this thing is like nothing we've ever seen in our lives. And so many of you out there have really been decimated by it. And if you had precious metals and you had some mining stocks, you might even be better off than you were before it all started. That's the irony. I don't want to feel guilty for planning ahead 10 years and kind of going through the past 8 or 9 years, watching the markets go ever higher, which they still are. And they're going to continue probably to go ever higher in the stock market. And they'll keep monetizing debt. They'll do whatever they have to do. And that's it. But yeah, this thing is such a mess. And the debt that's been added on in just the past 6 months, it's like trillions and trillions of dollars. So we knew it wasn't going to get paid anyway. Now there's more not to get paid.
Well, let me give you this. In his speech last week, Powell referenced several times, they're doing everything they can to get some inflation going because you got to try to inflate away that debt, right? You pay off yesterday's debt in the less valuable currency of tomorrow. That's how we got out of the World War II when we had debt to GDP levels like this. They inflated it away. They put yield curve caps on so that rates couldn't go up, and that's how that debt to GDP. So they're going to try that again. Powell talked about how other countries, referencing Japan, but not by name, have tried all these things that they've currently been trying and been unable to spark inflation. So he kept calling those conventional methods. Kerry, what's coming next is going to be the non-conventional. We talk about helicopter money. We've been talking about that for years, or, basic universal income, whatever they want to call it. It's just going to be direct cash to people that can't find a job, right? And they got to pay their mortgage, or they got, and there's all these jobs that are going away that aren't coming back. All these things are coming. And, you referenced earlier, you mentioned, the Fed and the bullion banks, everybody kind of fighting against us all these years, trying to keep the price of gold down, to make it look like, the dollar's doing okay, and try to keep confidence in the monetary system, because if gold was soaring, that betrays that confidence. I think at this point, maybe it's one thing. It's like they've got to pick the lesser of evils. They got to keep pumping the cash, right? And so gold price, whatever. I guess we can't worry about that anymore. At the same time, they also kind of need a higher gold price. They need higher inflation. Maybe they need to reset the value of gold from where it's been pegged at, for decades. And so I think all of a sudden a higher gold price might be beneficial or not looked at with such scorn by the bankers. And that might be something to watch in the months ahead too.
and they might just be on the long side of things now.
Yeah.
It's J.P. Morgan, right?
Right. Or, we've seen all of these bullion banks, getting hauled in front of the regulators, whether it's at the Department of Justice, pursuing criminal charges against them, or now, the Clouseaus, the Keystone Cops, the CFTC, whatever. But what was it, just not even 2 weeks ago? Scotiabank, who's getting out of the gold business, right? They bought Makata, which goes back to the 17th century. I mean, that's the world's oldest bullion bank, gold dealer. They bought them a couple decades ago, and now Scotia Makata, they're getting completely out of the business. Well, why? Well, they can't make money at it, first and foremost. They're bankers after all, right? Can't make money at it anymore. Well, screw that. We're going to just go back to sticking it to people, through all of our ATM fees and mortgage costs and all the stuff that Wells Fargo does, But on the other side of that too, so you can't make money at it. And then you get your compliance department breathing down your neck, saying, wait a second, I just got a call from, somebody at the Department of Justice. What the hell is going on here? And so so it's kind of a double whammy for these banks to just say, screw it. It's been really interesting to watch, Kerry, ever since the physical market really kind of began to break down right after QE to Infinity started in March. It's been really interesting to watch the open interest on the COMEX. On balance, I think it's safe to say the banks are reticent to continue playing the games they've always played. Open interest is not soaring. The bank net positions where you can always see how net short they are. In fact, in the last bank participation report, the banks had the smallest net short position since May of last year. So the signals are there. And like I said, then you think their masters are looking at them going, we don't really want the gold price to stay down anymore. Signals of some real sea change are there as well. So again, I don't want to make it sound like, I'm Mr. Pie in the sky, everything's just nothing but rainbows and lollipops going forward. It's never going to go straight up. But I don't think a lot of the traditional impediments are there at present, nor will they be for quite a while to come, given what the Fed has told us they're going to do.
Hey, what's the technical resistance on gold? The 2080,
yeah,
1980. That'll go through that in a couple of days, right?
Well, it's funny. As we record this here on Monday, the battle at 1980 has just been ridiculous to watch. I mean, again, there are not a lot of traders around. It was a UK holiday. It's the last day of the month. And if you go back to Friday and then through today, the capping, the obvious, I mean, what they do, they either put actual sell orders in or they spoof. We know that continues, right? That complaint against Makata last week, they talked about thousands of occasions over the years and the spoofing is you just flash in an order of like 10,000 contracts to sell. And then you get the market to tumble in response to that. And then you pull it back real fast. It all happens in a nanosecond, but it's enough to wipe out and get some bids to be pulled and that kind of thing. There's no doubt that continued. And you look at this chart, and now look, if someone's listening to us on Tuesday or Wednesday, just go back and pull up a chart of Monday. Yeah. And look at the action around 1980. I mean, it's just absolutely ridiculous. Now, whether somebody wants the price to stay below 1980 for the end of the month, maybe there's some over-the-counter options that have to be priced today at the end of the month.
The $2,000 options you want to expire worthless.
Right, all that stuff. So I suspect, there's always going to be, first, there are always going to be little small things like that happen in gold and silver, which is why you don't have to pay attention to them for very long to figure out that this totally screwed up. I mean, it's obvious that these markets trade like none other. Anyway, moral of the story is we're going to get into tomorrow. It's going to be the 1st of September. We're going to be getting back to all hands on deck. That real interest rate thing is going to have more sway. The dollar moving down is going to have more sway. People are going to begin to anticipate this next Fed meeting coming up in 2 weeks. I suspect we'll be back in the 2000s pretty quick. And I don't see any impediment on the silver chart to silver making a stab back up to its highs from 3 weeks ago. It'll be really interesting to see if it starts trading with a 3 on the front of the number soon too.
Well, when it breaks $30, then 35, then 40, then it's the record. And I have a feeling we'll be seeing record high silver prices imminently.
Well, we've talked, remember last year, Kerry, we were talking about how Gold in every other foreign currency outside the dollar was making new all-time highs. You know, it's new all-time highs in pounds and euros and even SDRs. But yet in dollars, it was still like $1,600. And we're like, something tells me it's really only a matter of time before it's in dollars. Well, now here we are, gold making new all-time highs in dollars. You can't help but look at silver and go, well, maybe that's just a matter of time before it catches up too. And
we're getting the chicken effect where the filet mignon, you can't afford steak, so you're buying chicken.
Exactly. And supplies are clearly very tight around the world. People say, well, I can walk into my local coin shop and he's got some silver. Yeah. We got to look at is the wholesale market, you know, and the 1,000-ounce bars. Andrew McGuire, my friend, has told me some stories over the last month or two of just the fiasco of trying to get delivery at the wholesale level, and that they get bars shipped to them. When they finally do come, they don't even match the serial number of what was supposed to be on the invoice. You know, stuff like that. You know, you still can't get even retail silver. I mean, what? $8, $10 premiums. That's not because the dealers are all trying to screw you. It's just that they can't get it themselves, you know. And so there's a lot of really positive things there, you know. And if I give a plug too for what you do, I mean, man, there are some mining companies out there that are going to really have some interesting years ahead, and you need all the help you can get. You don't want to just be throwing darts. It's going to be an interesting time to be alive here as we go forward.
Oh yeah, especially these pure silver plays with high grade. They often have narrow veins, so they're a little trickier to mine.
Hard to find.
Yeah. There's only a few of them, and but I have a feeling there's going to be a lot more in the years ahead because there's so many mines that have just been abandoned.
Right.
Because the price of silver, you know, if you didn't have $20 silver, really hard to make any money mining silver alone. As a byproduct, sure, you're mining copper or lead or zinc and you get some silver, it's all gravy. But yeah, we're in for some interesting times ahead. I know you got to fly, so just go over to tfmetalsreport.com, sign up and become a member. It's the best deal in town, especially in inflation adjusted dollars there, Craig.
Exactly. I like that, Kerry. That's for sure. I just had to pass along a cost of living increase to all my subscribers. I raised my cost for the first time in 4 years, but it's still a whopping $15 a month. So it's not like
$180 a year. Hey, and totally worth every penny if you really care about this stuff.
Well, and you know, the community's great. Everybody adds their own 2 cents as we go through the day too. But man, given where I think this is headed, I think it's a pretty good investment of 50 cents a day. So I appreciate the plug. And you know, this really is. I mean, I think there's a lot of bad information out there. There's a lot of people that are generalists that don't really pay much attention to the precious metals. They just see the prices high. And so they go out and say, well, it must be some kind of bubble. No, not by any traditional measure or near that. And then you look at the shares and they think, well, you know, the shares up 100% since March. You know, clearly that means no. We go into this next quarter of earnings releases, which will be around Halloween. The price of gold quarter over quarter is going to be up another 10%. And with the leverage these mining companies get, their earnings are just going to be exploding again. And there's a cycle to these prices. They kind of peak into their earnings season, they fall back for a month, and then they rally again for another 2 months into earnings season. There's just a shortage of quality information on the precious metals, how to own them, you know, all the other kind of secondary stuff like the shares. And so we try pretty hard for our 50 cents a day to provide some of that.
And a lot of these companies, like you mentioned, and you can always look at the sponsor list. All those companies, pretty much just about everyone I own shares in. But a lot of these companies trading at or near 62-week highs. And that's a pretty amazing thing when you think about it.
I'm sorry to laugh, Kerry. You said 62-week highs. Didn't Obama?
62. No, that was 57 states. Did I really say 67? Oh, God. 62-week highs. Well, you know, for accounting, you know, there was a company called Computer Associates, and they mastered the 32-day month.
The turd.
jack their earnings up. So
There you go.
think about, I was looking at a stock actually, and its high was 62 cents. And that, like, my brain just got fried and bum.
Right.
But it's actually 52-week high at 62 cents, 62.7. And this was a stock that when it crashed in March, I think it was at 9 cents or 11 cents.
Yeah, probably.
Gone up a little since then. And all of these companies, Craig, everyone that we work with has financed, took on additional capital without excessive dilution within the past 6 months, and a lot of them within the past 60 days. And that's what we are going to keep seeing. These companies are, they've got money to do their exploration, and they have no problem going into the market to raise capital.
Right. And you know what? And let's just make sure we cover that one last point too, because this is important. You mentioned being able to get money. Well, where's that money come from? It comes from institutional investors and hedge funds and, people like that. There's all this cash, there's trillions and trillions of dollars that are being created, right? Slushing around and have to get diversified and things like that. Do not underestimate the value of that news 2 weeks ago of that crusty old bastard up in Omaha putting money in. Okay? The guy that hates gold, would never own gold, never own any gold miners, all of a sudden, he didn't take that big of a stake and was only in Barrick. But you and I know how gold works. And you and I know the history of the manipulation and the mining shares and how silly some of them are run by these CEOs that are just geologists, stuff like that.
Yeah.
And so we're kind of reluctant, you kind of get wounded after a while of trying to trade them. We understand that. But 99.98% of the investment world doesn't understand any of that, right? They just have never owned the miners just because, why would you? Yeah. Now all of a sudden, their beacon, their icon, Warren Buffett himself is buying some Barrick gold. Wonder what old Warren sees there. Maybe we ought to look at some of that. And so initially that money begins to flow into, Agnico Eagle and Goldcorp, and the big producer. We've seen the GDX outperform the GDXJ recently. But as the more of this institutional cash gets interested in the sector, that rising tide lifts all boats, and it's going to trickle all the way down to the exploration companies. So please, everybody understand. That was a big, what do you want to call it? Just like a seal of approval for these guys who aren't looking at
watershed.
Yeah, it was a big deal.
And what that will cause is more M&A activity, because we know that the majors have, the exception of maybe Agnico, really have very little exploration expertise anymore. They just don't have what it takes to increase their reserves. They're operators. You just go to Newmont Barrick's joint venture in Nevada, and you see that firsthand. All they're doing is blowing up those mountains where they found gold already and just moving out.
Try to find some more. Yeah.
Just
what choice they have. Yeah, they've got to keep adding. It's like, I'm sorry, I'm kind of running along here, but like last year, Kirkland Lake, which oh my gosh, I've made so much money holding over the last couple of years because Eric Sprott told me to buy it when it was about $8 3 years ago. They bought a company called Detour, which was dilutive, and people said, "What the hell are you doing?" Now I don't know. I'm not privy to all the specifics. The assets of Detour may not have been that great at $1,500, but they look great.
Yeah, and I know the former CEO of Detour. He's now involved in a company called Goldterra, which happens to be a company that we work with, and he's going to do it again.
There you go.
Do it again.
That's the kind of stuff that there were back in the late 70s, and I don't know if this is all going to play out the exact same way again though, but in the late 70s, we went to negative 5% real interest rates, okay, where the inflation rate is 5% higher than the 10-year note rate. It's now about 1. If we go anywhere near back there again, we'll see. Maybe we'll get to -2 or -3. But when we went to -5 in the 70s, gold went from $100 to nearly $1,000.
$850 an ounce. I remember well.
In mining, you can go back and look. A lot of these mining companies, there was such a frenzy at the end. They went from 30 cents to $30.
Yeah, and here there's 1,500 publicly traded miners, precious metals, and of that, I don't want to hazard a guess how many are really good companies, but let's just say somewhere 10 to 20%. Those companies could really see for your money.
Yeah.
I mean, we've had them on, I don't want to get into it. Just take a look at the sponsor page at financialsurvivalnetwork.com. Enter the contest, financialsurvivalnetwork.com/contest, and win $1,000 worth of gold. Actually, it'll be either a half ounce of gold or $1,000 by September 25th, whichever is worth more. I have my feelings about which is going to be worth more. That's why I threw it in there. So, but if there's multiple winners, you're going to have to split. But hey, still free gold is free gold, right?
I think it's going to be the half ounce is what I'll wager on that one.
All right. Well, hey, feel free to sign up.
Hey, maybe I will.
Anyone can participate. If you're out of the country, it's like really hard to ship gold out of the country. You'll get a check. Yeah. That's it. You can't ship gold to like South America and other places. They'll just seize it from you. You'll never see it. But in any event, so go over to tfmetalsreport.com. Check out financialsurvivalnetwork.com. Sign up for the newsletters. And Craig will be talking to you real soon.
Thanks, Kerry. All the best.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.